Morning, Steve Free in Chicago with the morning grain comments. Markets, grains are a little bit higher overnight, led by the soybeans. Outside markets certainly have been volatile this week. The crude's making new highs. The dollar's a little bit lower, and the stocks were higher. Now they're lower, but NASDAQ continues to be volatile and higher. First, the NASDAQ saw record earnings by Google and a big rally. Yesterday, Facebook didn't meet expectations, and for one-day loss, and the company's value was record high. And today, Amazon showing profits, and the NASDAQ's back up. So quite the volatility. We get the jobs report today, which is going to be critical. And also next week's CPI data should show the possibility of higher inflation, especially food and energy. We also are watching that the cases of Omicron in the U.S. is on the decline, which is good news for the economy. As far as the grains are concerned, a lot of conflicting news coming out of South America. There was one company today that dropped the entire South American soybean crop, 30 million metric tons, from their earlier estimate. That would probably move less Paraguay beans into Argentina for their crush, and maybe more demand to the U.S. There was talk that China yesterday was a buyer of at least maybe 8 cargoes of U.S. soybeans, and that I think is positive to the bean market at this $14.50 price area. This week, soybeans, meal, and oil all made new contract highs, but backed off a little bit because of the possibility this weekend some of the dry areas of Argentina, Brazil, and Paraguay could see some rain. Next week, it's warm and dry again. The rainfall that they might see over the weekend may be short-lived. Our weather guy says that maybe this could stabilize the lower crops in Paraguay and southern Brazil, but central and northern Argentina could see more stress. It continues to rain too much in northern and central and eastern Brazil, which is slowing harvest and slowing the loadings of record amount of boats waiting to be loaded beans out of Brazil. The corn market has seen quite a bit of bad news in the last few days. First, ethanol stocks were sharply higher and margins were down. Secondly, the ag attaché in China reduced China's corn imports from 26 million tons to 20. And then yesterday, the USDA announced cancellations of 380,000 tons of corn to China. Still trying to figure out what that's all about. Some people say it could be a mistake. Other people say that the buyer needed those vessels for beans, and that China will come back in next week to buy additional U.S. corn. Also, South American corn crop is going to be down, and that could shift some export demand to the U.S. And I think that as the spring and summer begins to see more driving, Omicron cases decline, you could see a drawdown in those ethanol stocks. The wheat market continues to dance around, and I think two things. Number one, U.S. prices are still too high for export demand. And number two is the Southern Plains is going to continue to see dryness through the rest of November. So anyway, we kind of think that weather in the U.S., at least this summer, will be dry in the Southern Plains and parts of the Western Corn Belt, focusing a lot on Iowa, Nebraska, Missouri, and to the Southwest. As always, these are my thoughts and not those of ADM Investor Services. Have a safe and profitable trading day. And remember, always treat people like you yourself would like to be treated.